Will CrowdStrike survive this massive outage that they had recently? I don't know. It's a tough one. When I first heard the news, I kind of thought like Warren Buffett. When people are greedy, be fearful. When people are fearful, be greedy. But then I'm like, wait a minute. They got class action lawsuits being levied against them by shareholders and businesses alike for the outage. And it's one of those things which is kind of funny for a cybersecurity company. There's something called single points of failure. I don't know the technology behind Falcon, but it sounds like this was caused by an update that was rolled out but wasn't properly tested before yet. CrowdStrike is a cybersecurity company with something called Falcon that they're touting everybody and saying, oh, it's fully tested, it's great, there's controls in place to mitigate against any outages and failures, blah, and blah, blah, blah. And they're gonna be sued for that. And when I look at their numbers, it's interesting, right? There's a couple different types of company. So there's growth companies and there's stable companies that are actually turning profits and generating a return on investment for investors. Well, CrowdStrike is a growth company. Like diving into the data, looking at something like CrowdStrike, they've had a 5-year compound annual growth rate in revenue of 61.53%. That makes them the industry leader in their field for compound annual growth. But believe it or not, they're not the larger when it comes to market cap. There's others out there that still participate in cybersecurity that have a larger market cap, or they're quote unquote worth more than CrowdStrike. So it's a nuanced conversation to have, but I was looking at this stock and I really like the company. Their balance sheet is strong as far as assets and liabilities are concerned. They're a growing company that just recently became profitable. And it kind of leads to, if you're a growth company, the last thing you want is to have people not continue to subscribe to your services, and you want to reduce churn. So churn means people dropping out and not renewing their subscription, right? Like we all do. When House of Dragon ends, we renew our subscription to whatever service you're using to watch it. So when I look at CrowdStrike, it's like, okay, I don't think that they're going to actually have a lot of churn and have people leaving, because the switching costs for one of the largest cybersecurity platforms to actually remove them from the infrastructure of your business, it has a huge switching cost. And that's part of CrowdStrike or any huge cybersecurity or IT company's moat is like, hey, you can switch, but it's a huge cost and job to switch over and to pull us out of your system. So what I feel like I'm going to see, they're going to report their numbers for the second quarter later this month. I want to say 27th for some of the stuff I've heard, but they hadn't confirmed. But they're going to report their earnings. So, and it may not even impact this earnings, but it's definitely going to impact the next ones. I want to look at that recurring revenue of those recurring subscriptions and see what that number does. Because when you look at it, that subscription revenue has really been what's driving the growth in the company, right? The more subscribers, the more they grow, the more revenue they can make. And they just had to find a way to turn that revenue into profit. It's expensive to run these software companies, but just breaking it down, like in January 2020, they had 430 million in subscription revenue, and then all the way up to January of this year when they last reported, they're up to $2.8 billion in actual recurring annual revenue for their subscription model. So when you look at it from that standpoint, if they start to actually see a drop down from 2.8 to 2 or whatever, or lower, depending on what this looks like, we really can start questioning if they're going to be the leader in this space. But I don't even know if I can look at their income sheet and see the new signups. That's really where it's going to hit them in the pocket. There's going to be people that are like, okay, I'm not going to renew and I'm not going to sign up. I'd rather sign up with somebody else because I'm a bit wary of your system. But with all that being said, after the dust settles and with the lawsuits and everything else, just due to the huge switching cost, I feel like CrowdStrike is going to bounce back. I think I said it before, but they went from almost $400, around $390 to the last time I checked, around $230 per share. And I hadn't looked at the technicals yet, but I got a feeling we can probably find some support there, but we'd have to go to the charts to find out. So for me as an investor, I really just want to watch it. I wouldn't dive in straight away, but I want to watch to see how they perform, because I know this is a great price to buy in, because previously they were trading at a price to earnings of around 430 times, meaning they're on a crazy growth rate. Like I talked about before, going from 400 million in revenue and within 4 years jumping to 2.8. That's what that price to earnings ratio shows us. And then their forward P was about 53 times or so. So we're going to see those numbers change in these upcoming earning reports. But I do think CrowdStrike is going to survive. And it's a company that I like. But in order for me to invest, I need to see it get back on continued growth. But with that being said, there may come a time where once it does get back on track, if I don't catch it fast enough, I wish I would have bought it at these prices. So every time you see something, don't just look at the news behind it and the stories of outrage. Actually dive deep into the company. Go to your Yahoo Finance or whatever tool you use. Like I love finchat.io, not sponsored, but it allows me to get a great overview of companies and dig into the key KPIs for the company and the performance metrics that they actually track and care about to really paint a bigger picture. I love doing these deep dives into companies. Let me know what you guys think in the comments. I will be pushing out more stuff like this, and we are in earnings season. So as we can see, man, like finally the market has kind of pulled back. And if you've seen recently, like the Fed's like, hey, we're going to hold steady on interest rates. We want to see that inflation come down or remain low where it is. But there's also a dual mandate when it comes to the Fed. They also care about people having jobs and inflation being low. So actually, when it comes to the jobs, the Fed cares about maximum employment, right? So everybody that wants a job can have a job, which is a very hard thing to balance because if people have jobs, they're going to spend money. And if they spend too much money, they'll throw the supply and demand out of balance, causing the Fed to be like, oh, we got to hike rates again. So it's a very delicate thing they're trying to balance out. But seeing this market pull back, I really have my detective hat on and I'm really evaluating these balance sheets for these companies to really find a strong company that I want to invest in. It's in a pullback. Remember, don't get super scared when a company pulls back if it's not bad news like CrowdStrike, like we need to investigate them more. But these other companies that pull back just because they are part of the NASDAQ or some of these heavy tech companies that were already pushing all the way up to all-time highs, the market has a natural ebb and flow. So I know it was going to pull back, and I've already called out some levels for companies like Palantir, and I'll continue to do that because I actually want to buy them at those support levels or supply and demand levels, whatever way you want to say it, because I know I have a good chance to profit. We want to buy low, right, and sell high, another Buffett-ism. So don't be afraid of what you're seeing in the market, but also don't follow people's advice on what to invest in. Actually do your own research and look into these balance sheets and some of the technical stuff to get a good entry. And that's what I continue to teach on this channel. And remember, our goal here is for you to leave more behind for your family than just debt when you die. And if you like this video, check out this banger above because you'll dig that one into it. So next time, it's your boy Michael T. Ragland. I am out. Peace.